Okay, so yeah, again, we're coming back to the YCharts Peter Lynch universe, which is a portfolio of stocks. There's 35 of them altogether. They use quantitative analysis to try to find stocks that would resemble Peter Lynch's methodology for picking stocks. When we look at this explanation, it says it selects stocks with a low market cap, but not microcap stocks, a low PEG ratio, and a reasonable debt to equity ratio. When calculating returns for the universe, we pick the top 35 stocks based on dividend yield. So yeah, the third one on the list here is, and today is what, January 27th, 2023. This is Arch Coal. And again, make sure you do your own due diligence for this. This is more like just kind of a jumping off point for investment ideas. I don't know personally like a lot about these companies. So yeah, I would definitely want to spend a little bit more time like reading its annual reports and such, so you get a better idea for what's going on with these companies. But nonetheless, let's look at Arch Coal. So it says here, Arch, in the profile, Arch Resources is a producer of met and coking coal. The company sells its coal to power plants, steel mills, and industrial facilities. Its operating segment includes Powder River Basin, metallurgical, other thermal, and corporate. The company generates maximum revenue from the Powder River Basin segment. Its PRB segment containing the company's primary thermal operations in Wyoming. The MET segment, which I guess that means like the metallurgical coal, containing the company's metallurgical operations in West Virginia, and other thermal segment containing the company's supplementary thermal operations in Colorado and Illinois. So it sounds like they've got a few coal mine operations in a few different states. Geographically, it drives the majority of its revenue from Europe. Go figure, considering what's going on in Europe right now. So yeah, this is headquartered in Missouri. It's in the energy sector. Industry is thermal coal, although it sounds like it also does like met coal as well. Yeah, it has a market cap of $2.64 billion. The dividend yield going forward, that's pretty smallish, 0.67%. It has revenue 5-year growth of 2.26%, which is not surprising considering how unloved coal is nowadays. Revenue quarterly year-over-year growth is 45.33%. So you can get the sense that this company is kind of like maybe in a turnaround, at least in a cyclical kind of turnaround, considering how unpopular coal has been, but because of what's happening politically in Europe, it sounds like maybe they're possibly turning around. They're definitely getting a lot more revenue than they have in the last 5 years. So anyways, EPS diluted 5-year growth, not so hot, negative 19.67%. EPS diluted quarterly year-over-year growth is outstanding at 76.42%. Its debt to equity ratio is actually pretty reasonable. That's quite low, 0.1468. Return on equity is pretty good, 123.6%. And yeah, what else can we look at? The PE ratio. PE ratio is 2.773. Yeah, let's look at some of the key stats on this. You can see here, like YCharts also does these like ratings on their stocks. So it has like a Y rating. This one says avoid it, maybe because it's like coal. The value score says off the charts here, 10 out of 10. It's got a fundamental score of 4 out of 10, I guess again, because it's coal. not a lot of lovers of coal out there. Valuation historical multiple, it's trading at a much higher rate than it's been historically. That's also probably because of like, yeah, again, the turnaround story that is coal. Anyways, key stats. The long-term debt. So it's 174 million. I'm just going to drill down into that and see how far they've come with reducing their debt, possibly. Oh, it looks like they've done quite a good job of reducing their debt. So yeah, clearly this company's been making money in the last, like, year and a half, maybe 2 years. Anyways, their debt's gone from what was $560 million to 174 million. So they're clearly cleaning up their balance sheet, which is always a good thing. Return on equity is 123.6%. Return on invested capital, 87.87%. Free cash flow, 1.0333 billion. Yeah, it's skyrocketing. Yeah. Huh. Okay. That's always a good thing. Free cash flow. Yeah, the dividend yield. No dividend. It'd be nice to see some maybe increase in dividend considering how much cash they're making right now. But reducing the debt's always a good thing. See if they've maybe been buying back shares at all. Have they been buying back shares? No, they've actually been increasing their shares, like 3 million. The PE ratio is 2.773. PEG ratio is 0.00006, almost 0. So really low PEG ratio. Yeah, I mean that's Arch Coal. So basically, yeah, like coal's been a commodity that hasn't seen a lot of love in the last few years. Considering like a lot of environmental policy is like targeting fossil fuels, not just coal, but like oil and gas. A lot of these kind of companies have been just been passed over by investors. So it's not surprising that you see their share prices now that kind of like what's happening in the energy space go from unloved to slightly more loved, maybe not entirely loved or totally embraced by the investment community, but there's definitely a good reason to maybe consider investing in this company because it's clearly making a lot of money, and I think maybe its valuation is attractive. At least it is according to YCharts, which has a 10 out of 10 value score for it. So anyways, I'll let you guys maybe do a little more digging on Arch Coal. I know I'm going to add this to my watch list. So anyways, yeah, if you're interested in following kind of like more about what's going on in this YCharts Peter Lynch universe, go to my website, peterlynchinvestor.com, where I routinely update the website with this portfolio, and yeah, you can subscribe to the newsletter there, and it'll keep you up to date with like what's going on with it. And also, you can also subscribe to this channel if you want to maintain or just keep an eye on like what's happening with the Peter Lynch universe. So thanks.